Welcome to Financial Insider Weekly. I'm your host, Michael Gray, CPA. My guest today is Peggy Martin. Peggy is a fee-only financial planner with the Family Wealth Consulting Group. She has more than 30 years of we must be talking about somebody else. 30 years of experience, so you started when you were 3,
Yeah.
in the financial services industry. Peggy assists clients with family wealth planning, including legacy, financial, estate, investment, and insurance planning. Her credentials include Master of Science in Financial Services, Chartered Financial Consultant, Chartered Life Underwriter, Fellow Life Management Institute, and Chartered Advisor for Senior Living. And the Master's in Science, you just got your degree.
I just got my degree, yes.
Congratulations.
Thank you.
Okay. Today, Peggy and I are talking about socially responsible and sustainable investing. So this is sort of the new area of interest. So let's get right into it. Peggy, why is there a current interest in socially responsible investing and sustainable investing?
Well, to answer that question, I'll give you a bit of background.
Okay.
Our firm, as all the credentials indicate, is an educational firm. And in addition to doing the formal education, we also do lots of reading relative to legacy planning and all the other areas of financial services. And what I am finding as our client base is maturing, or a lot of our client base is maturing, and my years of being a financial advisor, that legacy is becoming very important.
Mm-hmm.
People are saying to me, or clients are saying to me, what's my legacy? What am I leaving my community that may leave it better than it was? What am I doing for my family to leave it better than it was? And that struck me as socially responsible and sustainable.
Mm-hmm.
And some investors want to meet the needs of themselves without compromising the needs of future generations.
Mm-hmm.
And socially responsible investing and sustainable investing can promote the desire to do well by doing good.
Mm-hmm.
And the sustainable area tends to be more environmentally concerned,
Mm-hmm.
but they're very closely related.
Yes.
I have done research on this to come up with a precise definition between the differences between SRI, which is socially responsible, and SI, which is sustainable. And there's not a huge difference in the definitions, and each company may define it differently.
Mm-hmm.
So it can make it very difficult for the consumer to understand exactly what it is. And are they really getting a socially responsible investment when they're seeing a mutual fund that's making an advertisement that we're socially responsible? Well, is it really socially responsible, and how is that defined? And does it meet the goals of the client?
Of the particular client, yeah.
Right.
Okay. So this is like a raising of consciousness, okay, if you will, particularly as we're getting older and what have you, and again, maybe we're concerned about maybe the consequences of the decisions that we're making and what impact it's going to have on our community and what it means as far as the message that we're giving to our children. I think that's what you're saying.
Right. Right.
And so how significant has this area become as a growth area?
Well, in looking at that, I found that going back to 1995, there was about $640 billion invested in some form of socially responsible investing or sustainable investing. And at the beginning of last year, 2010, it had increased up to $3 trillion.
Holy mackerel.
Which tells you that that either the marketing people are doing a very good job on convincing the public of the social responsibility aspects, or that truly the consumer is wanting to be socially responsible. The baby boomer has entered the generation where their children are now grown for the most part, and they may have grandchildren. And again, I think it gets back to the legacy component. What did I do? What did I do to make this world a better place?
I mean, I can just tell you, and this isn't true for everybody, but I can tell you that there are a number of my clients, some of which you know, that the return on the investment has become almost secondary. And in some cases, maybe even they're making their personal financial objectives to some degree secondary. That they're concerned, if you will, sort of in investing in the future. In other words, a better world.
Right.
And so that's what and so again, when we're thinking of the message that we're crafting to these people and what's being offered to these people, what they're looking for as investors, sometimes that's quite different from what we hear. We tend to focus on the certain thing, the thing that we think, mechanically, that we've been trained in, if you will. So this is how it works. If you're trying to build a long-term investment program that you're planning on working for your retirement. But their mind might be someplace completely different.
Correct.
Yeah.
That's why I think it's important to start a relationship with a client or to revisit a relationship with a client by understanding really what their values and goals are. And I think going through 2008 and 2009, early 2009, created a need on our part as a team to have a better understanding of our clients and what their values are, what they do want to create with the wealth that they do have, and do they want community to be a part of that, and is that important to them? From the standpoint, community can be by leaving dollars to a charitable organization, or it can be by taking care of community too. What are we doing in our own day-to-day activities that help take care of community? But one of the things our organization is an expert at is managing the risk of a portfolio. That can be either with the total global marketplace, including alternatives, or working with a client on their social responsible investing goals. And if you take a structured approach to the socially responsible investing and have that broad diversification that's global, we believe that your returns will be, the risk of the portfolio will be managed, and it will not necessarily compromise the returns of the portfolio.
Yeah, or maybe not so much that it's debilitating, or whatever, however we want to look at it, that's a serious problem.
Right. The thing to remember when working on the investment strategies, I think if the goals of the client have not changed, and you're managing the risk of the portfolio, the return will take care of itself. So how about, what kinds of choices or how many choices are there for mutual funds in this area? Well, based on the immense growth that has taken place over the last decade and a half, there are many, many mutual funds out there. And actually preparing for this session, I took a look at a lot of different funds just to see how they're being advertised. And again, I would caution anyone looking for a social responsible fund or a sustainable fund to understand what the purpose of the fund is, and also to look at what companies are in that fund. And most importantly, to find out, is there third-party screening that's taking place? An outside organization looking at the fund and the companies that are in that fund, and does it match the asset class that it's in? Those things are all important for the integrity of the fund, and also, again, to meet the goal of the socially responsible person.
So what might be happening is that some people are just using this as a marketing play, so they can say, invest in our fund because we're socially responsible, but what they do may be quite different from what they're saying.
That's why it's important to understand what the individual definition is. What is that company's definition of socially responsible?
Okay. Okay, well, some people prefer, for whatever reasons, and we'll get into maybe some of this later, but to make more individual investment decisions. In other words, they buy companies rather than funds.
Correct.
And what are some individual industries that people have been interested in that are sort of in this socially responsible and sustainable area?
Okay, a while back we had an older gentleman come into our office who had visited with us a couple of times as a prospect, And I believe it was on his third visit that he announced to us that he was investing totally in solar. And diversifying it, by his definition, in a number of different companies. Well, that's not the definition of diversification that we use, because it's in the same industry. So if there is a huge drop off, the volatility of that type of a portfolio design is extreme.
So we could have 10 solar companies that you may invest in, but meanwhile we have 3 huge companies that have gotten into solar that are manufacturing suddenly in China, and they have a big impact on the ones in the United States or whatever.
Correct. Correct. So we do discourage in any kind of a portfolio design any kind of individual stock selection. We work with clients to educate them on the importance of the diversification in the portfolio, and that was a similar conversation that we had with this gentleman that came in, that we wished him well, and don't know whatever happened with that for him and his family. But again, one of our big things is working with clients to create the risk managed portfolio that works for them. And that can include the total global marketplace, it can be socially responsible, it can be alternatives, but it's all around the diversification.
Yeah. So I suppose there are funds that sort of revolve around alternative energy or other areas.
Usually the funds are based on asset classes, and rather
so more
than
like large cap, small cap, medium cap.
Correct.
Are they international? Are they?
The organization that we work with a lot has a socially responsible emerging markets fund, a socially responsible U.S. core equity, which is a combination of large and small cap stocks. And then they have an international sustainable fund. They do not yet have an international socially responsible fund.
Okay.
You can find all different kinds of funds out there, but we look at the diversification within the portfolio design. Are we able to cover enough area to provide broad diversification to the client? And in this case, we feel with over 2,000 stocks available in these funds, that the client is getting the advantage of emerging markets, they're getting the advantage of the U.S. large and small, and they're also having the international component in there.
So related to this, I guess the bottom line is that people need to recognize that we're talking about, in a sense, emerging technologies. These are areas of rapid change, and we're going to see a lot of these companies come and go. In other words, these are very high-risk investments when we're talking about a particular industry and so forth. For example, solar, okay?
Right.
And so it's okay to have that as a part of the whole, your whole investment strategy, but to get too much of a focus into it is just taking too big of a risk, and probably doesn't make a good long-term investment sense.